The big story of the day, and indeed for quite a while now, I must admit, is the exchange rate. The South African rand against the US dollar has hit 9.50 and gone beyond 9.50. 9.50, many people's targets, currently 9.55, 9.56. Profound implications for everyone in South Africa and also for the markets and for the economy, and most notably for the South African Reserve Bank, which this week is going to make a decision on South African interest rates. So let's debate the rand now and let's preview the MPC decision with Dave Gracie, who is Head of Currency Derivatives and Investec Capital Markets. He's in the Power Lunch Johannesburg studio, and with me in Cape Town is Peter Worthington, economist at ABSA. Gentlemen, thanks very much for joining us today. I've, in my own special way, scribbled down a few little notes on the yes side and the no side for the MPC, and I'll forward it on to Jill Marcus later on. On the yes side for a rate cut, negligible GDP growth, number one. Number two, inflation within range. Number three, peer pressure, because Australia and Europe have recently cut, and we've had 512 rate cuts in a row now, apparently worldwide. On the no side, the South African rand. On the no side as well, need to attract yield seekers, and also the unsecured lending side of things. That's my gambit. Off to you now, David Gracie. What do you think?
2 weeks ago, Lindsay, I might have agreed a lot more with your yes side. Clearly on the no side now is the level of the currency. I believe that as the currency has weakened quite substantially, a rate cut now would be even more devastating for the rand. And I think Governor Marcus and the MPC, they're cognizant of this. Some time ago, they were talking about a fair value for the rand at about 875, 870. Clearly with the rand at 955, we've got inflationary threat. In our view, absolutely no cut at all.
Okay. Peter, do you agree with that, first of all, before I go on to the rand effect on inflation?
Yes, I do, actually. We've had a long-standing call that the Reserve Bank will not cut rates. And in fact, I think our view is that the next move is actually going to be a hike sometimes towards the end of 2014. One thing I would just say, it's not all rate cuts around the world. There are some specific countries which are actually hiking, for Brazil, and they do so because their own domestic macroeconomic fundamentals merit a slightly different policy than what you've seen go on in other countries which may have been cutting, and I think that's true for South Africa as well.
Let's have a look at the effect of the rand, though, because at the moment, although the rand has been on a downward trend for quite a while now, it hasn't yet manifested itself in inflation. In other words, we're towards the top of the 3 to 6% band, but it's not punching through. It's not rampant.
Well, it hasn't punched through yet, but it is very clearly going to punch through. In the last MPC statement, the SARB themselves acknowledged that we would see a breach of the upper 6% band sometime in Q3, and we concur with that. In fact, I actually think we could see that breach happen as early as the June print, which will be released in July. So CPI inflation, headline inflation, is going above 6%. We think it will be temporary, as does the SARB, but it's not going to come off so quickly that it should give anybody comfort about there being great scope for rate cuts.
David, do you agree with that we are going to punch above that 6% upper level of the target band? And if so, will it be maintained? And if so, is it sinister? And if so, does that mean that we're not going to get a rate cut, but a flatliner or even a rate rise?
Lindsay, I think we've hovered so close to that 6% now for a number of prints. I think a punch above that is inevitable. How big a concern that is, I'm not too sure. You know, we have the global situation certainly is not inflationary. So I don't think it's a major concern that we'll punch above that even for an extended period of time. Of course, at the consumer level, the official numbers are absolute garbage because, you know, I would argue that if you go and ask the average miner in South Africa what they're paying on CPI is nowhere near 6%. So I know we have to deal with official data, but we certainly see that rates cannot come lower in South Africa. I'm not sure when the first hike will be, but I think we're certainly flatlining for a longer period of time.
So you're saying that the CPI basket is misrepresentative. In fact, the people that are at the coalface, for want of a better phrase, are experiencing greater inflation than the basket actually suggests.
I would argue that it's much bigger than the 6% at the moment. Obviously, as I say, we deal with official data, but the man in the street is under pressure. I think your previous discussion about the unsecured lending is showing that spending power is decreasing all the time. The economy is not growing. And you know, the official numbers for average public citizen is not really representative at the moment.
That's an interesting comment. I've heard that before. Everyone says, well, inflation's X, but when I go down to Pick and Pay or Checkers or ShopRite or Woolworths or wherever it is, my basket goes up by a lot more than that. Do you agree with that comment?
Well, you hear it in a lot of countries. I mean, South Africa does produce CPI baskets into 5 income quintiles, and actually at some times, for example, when food prices are rising very sharply, you actually see a big divergence with the poor experiencing a much higher inflation rate than the wealthy. At the moment, the inflation rates are really not that different, maybe 1 or 2 percentage points apart. And I think something which was alluded to by David was that really I think a bigger issue is the level of indebtedness amongst the consumers, and particularly at the low income level, where people have taken on a lot of credit since the National Credit Act was introduced in 2007, and now they're really up to the neck in debt and having problems servicing it.
On the other hand, though, unsecured loans are not going to be affected, as far as I understand, by an interest rate rise or an interest rate cut, because it's a fixed level. Is that not the case?
Well, a lot of them are that, and they're obviously a lot of them are charged at a much higher rate as well. So I don't think that the rate cut makes a great deal of difference for those people who have unsecured credits out.
Yeah. David, what about the other? We talk a lot about unsecured loans, but what about people like myself, unfortunately, who is in debt? I mean, am I indebted? Am I as a class indebted? Are the middle classes in South Africa, not the lower to middle classes, also in debt and also at risk if interest rates either stay flat or go up?
Well, I certainly we're at risk if interest rates go up. I'm not sure that that's going to be the macro situation globally. Rates are going to be, or rates have been on hold for a number of years, trending lower or on hold, and I think South Africa is an example of that as well. I think for the foreseeable future, 6 to 9 months, rates may well be on hold in South Africa. But at the same time, with the impact of the rand on our imported goods, that's certainly going to have some effect on consumer spending. The economy is not growing, we're not creating jobs, and that's certainly going to be a problem going forward, Lindsay.
Yeah, indeed. And I'll tell you what else is going to be a problem. The fact is we can have another 25 basis points down on Thursday, which I actually think we're going to get, funnily enough, but it'll mean nothing to job creation and nothing to growth. It's a sort of a blunt instrument, if you like.
Yeah, that's true. You can begin to debate about how effective rate cuts are going to be here. I think our problems stem a lot deeper. They're structural in nature. We see the industrial action, the competition between the unions at the moment. We see the problems in the mining sector that's feeding through into other sectors as well. I think we have some serious structural impediments in the economy. The national planning or the economic plan that the government's been promising to implement for a long time, that keeps hitting some headwinds. The unions complain about that. We need some serious structural reform in our economy, Lindsay.
Yes, we do indeed. And someone nodding away at your comments is Peter Worthington with me in Cape Town, David. When the word structural was mentioned, you started nodding. Tell us more.
Well, I think that's right. I mean, we have a low growth problem here, but the issue is not that interest rates are too high. The issue is that we have no productivity gains in terms of the way we have organized our labor markets and our product markets. So that's an issue. We've got a problem internationally with weak demand that's undermining support for commodity prices. That's not something you can fix with an interest rate cut. We have a situation where growth is just intrinsically low and is going to remain this way unless we can do something to improve savings rates and something to improve business confidence so that they begin to invest again. And at the moment, unfortunately, I don't see anything on the horizon that's going to achieve that.
Do we need to keep rates where they are now so we attract the yield seekers? In other words, Mrs. Watanabe, the fabled Mrs. Watanabe, so she can come in with her money and just keep those flows going so the rand doesn't go for a proper ball of chalk. Is that a factor?
Well, look, I agree with David. I think the risk in cutting rates is that you actually do then spark a bit of a reversal of those portfolio inflows, which have been a key source of financing for a very large current account deficit that we have at the moment. I think the right policy when you're in this kind of stagflationary bind is that you just sit tight on rates, you try and ride it through. I agree, I don't think it's a big issue that CPI is going to breach the 6%. The Reserve Bank is prepared to look through temporary breaches like that with its eye on a medium-term achievement of the inflation target range. And I think that they should just sit tight. I think that's what they're going to choose to do. I don't think you're going to achieve much by an interest rate cut, and I think you risk a lot.
Indeed. David, just going back to that 3 to 6% band, it's been changed before. Might it be changed again? Let's say that we do start to go above there and just hold above there. Might they change the target band?
I don't think so, Lindsay. It's been around for a number of years now, and as we've discussed over the course of the program, I don't think a 1% adjustment to the band is going to make any difference. So they move it up to 4 to 7. It might give the governor room to cut rates, but that's not the real issue as far as the economy is concerned. I'm not sure that any cut at this point, be it 25 or 50 basis points, is going to be meaningful, is going to make that much difference to the economy. There's other problems that we need to attend with or need to attend to, and I'm not sure that moving the inflation band is going to solve any problems.
You speak to a lot of people on overseas trading desks in the course of your day, David. What's the mood towards South Africa at the moment? Is there a sense that perhaps 2012 was forgotten for a while and now 2013, son of 2012, is going to be a horrible baby?
Yeah, I think we're really in a bit of a perfect storm at the moment, Lindsay. If we go back a little bit, foreigners have been heavily invested into our bond market. And they've, to a certain extent, been hedged against currency depreciation, but they've been heavy buyers of the bond market on the basis that the developed world is not growing at all, and yields there will be close to zero for a long period of time. Recently, we've seen the US rates begin to tick up. They've moved up about 25, 30 basis points. That's put some pressure on the bond market. And then, of course, we've had this labor strife, this ongoing labor strife. This morning, I forget the name of the mine, but a chrome mine. Some miners were shot with rubber bullets by the security guards in ongoing industrial action there. So sentiment towards the rand is certainly poor. At the same time as perhaps, and we'll have to wait for Mr. Bernanke later on in the week, as perhaps that the US bond market the yields begin to rise there and take some shine off or the attraction into our own bond market. So we're in a bit of a perfect storm at the moment. At the same time, commodity prices falling heavily. Sentiment towards the rand is not very good at all at the moment, and a lot of people are talking about 970, 980 in the not too distant future as a rand level.
One word answer, please, as we wrap up with you, David. Interest rate cut, yes or no?
Absolute no.
Absolute no, that was 2 words, but that's fine. I'll forgive you for that. Peter Worthington, your views on this one? The rand, 970, 980, no interest rate cut?
No interest rate cut with the rand this week. It would be imprudent.
Okay.